All right, guys, today's trade was very nice. A nice setup. This is one that we haven't really covered on the channel. Talked about it a bit inside the school group, but this is using a D-shaped distribution to get an A-rank trade across stacked levels. So you're definitely going to want to watch this breakdown. It's a little bit different to the usual trade setups we look at for the stacked levels. There are actually quite a few good stacked setups across this level here as soon as the market broke above. You can see without the developing profile, it broke above. This area actually gave a few good entries for this trade, but this end one here was definitely the cleaner and better setup using the developing profile to confirm it versus those earlier ones, which we'll break down in this video. Before we get into this, little rant, boys and girls. I saw this guy comment on yesterday's episode, and I've already banned him, okay, because I cannot stand this attitude. The guy's sentiment was, these are all just hindsight. We want the live sessions back. You're just being greedy, trying to funnel people into your paid group. I sometimes get the hate towards traders making paid groups because the majority of stuff here online is bullshit. All right, a lot of trading advice, trading courses and gurus are just repackaged ICT, teenage traders who haven't been doing this for very long and they're trying to sell mentorships and whatnot. So there's a bad sort of stigma to it. But let's put this in perspective. I've been doing this for 8 years. I've worked very hard at this, very hard at my craft. I've shared majority of what I do online for free, and have only recently really started to push things into this school group instead. And, you guys have been able to see my live execution, my live ability. I've shared, my own trading capability. But on top of that, if you go through any of my public YouTube comments or you go through even my old course testimonials page, hundreds and hundreds of people that have had extremely positive results implementing what they've learned from me. Getting their first payouts, their first fundeds, getting multiple payouts, getting big payouts. This has all happened from stuff that traders have learned from me. So I know what I've got is valuable and I know it works for me, it works for other traders, and that's the bigger green flag, is that it's not just me showing you, okay, look what I can do. It's people who have learned from me and are saying, wow, look what this has done for me. And I know a lot of the people who want the free live streams wanted them because they can copy the trades in real time, copy the live trades. Guys, if you want to copy a trading stream or copy a trader on a live stream, you're not going to learn anything. You might make some money every now and then, but you're not going to learn anything and you're just setting yourself up to fail. And if you're complaining about more free content, this is more free. Yes, it's analyzing trades that have already happened. However, it's helping to train you into seeing what to look for a volume profile setup, what to avoid and what to look for so that you can go and do it yourself. If you're the type of person that's going to complain about free content like this and want me to go and trade live for free and do everything for free, ask yourself this. Is school free? Is college free? Is university free? No, those cost tens of thousands to hundreds of thousands of dollars and don't really get you much further in life. I'm literally charging $99 per month to teach you a trading framework that actually has edge, that works, and you get to follow the live streams, and you get weekly group coaching, and you get daily feedback and daily interaction from me inside the community, and all the educational content for $99 a month. And if that's something that upsets you and you want everything for free, you're entitled. You shouldn't be a trader. All right, if $99 investing into your own education is outside of the picture for you, trading's probably not the path for you. Trading takes money, whether that's to actually buy evaluations, fund your own account, take losses, or to invest in your own education. Trading takes money. And if that's something that bothers you and you want everything for free, this is not the career for you. And anyone with that sentiment, I just block, okay, because it's entitled. So yes, the live streams are now behind the school. It's inside the paid community. But frankly, guys, I should be charging more for what I put in there, but I'm not, okay? It's $99 a month. And if you can't afford it now or don't want to pay for it now, it's also fine. That's why there's free content here as well, okay? There's so much free stuff available on my channels, main channel and here, that for someone to complain, oh, but you don't do live streams for free, is insane to me. It's so entitled. So an immediate block for that opinion, but continue to enjoy the free content, okay? No one's forcing you to buy anything, but it's just there for those that want a little bit extra and want the live streams as well as the direct feedback and the further continued direct improvement. Other than that, enjoy the free stuff, guys. Okay, let's look at the trade. So today's trade, like I said, this set up a few times across these levels, okay? There's a few good entries for this particular trade across these levels, but there's a reason why this one at the end was the cleaner trade setup and the one with the more confluences. So we'll break that down right now. First, let's run through from the beginning, okay? So off the bat, off the open, right, we do want to extend that profile, give it at least half an hour before you start to use that developing profile as a confluence. However, look what happened before that half an hour. Just off the stacked levels alone here, overnight value high, previous day value low, it gave a 250 tick short from this point here down to the lows. from the overnight value high down to that low. Okay, so off the bat, it already threw off one B rank setup there, counter trend as well, which was pretty cool. So obviously it broke through to the other side, eventually broke those stacked levels. And what we're looking at is looking at this pullback. When you get the market break through stacked levels like this, you're looking for an entry on the other side. It gave multiple entries here, but this one I'm going to show you is a little bit different. All right, it's a little bit interesting compared to the usual stacked levels we look at. If you look at the profile when we pull it across, okay, when it pulled back the first time, we did have a little confluence there, a little node that developed inside those stacked levels, and you can see that node provided a couple of bounces, all right, bounce back up, bounce back up. So a couple of good entries there. But the one I want to highlight here is the third one down. Okay, if we pull the profile across to when the market pulled back this third time, look what's happened with the profile here. Okay, so the profile no longer has any distinctive nodes within this range, within this stacked level here. Instead, what you've got is what we call in volume profile trading an even distribution. Now, an even distribution, a D-shaped node, these nodes you want to treat like a range, okay? This is basically saying the market's finding basically equal value across this range. And the way that you approach these types of range is you fade them from the lows and the highs. You wait for it to approach the edge of value, the edge of this distribution, and you fade those edges. Now, when the market is trending, like in this, it's put in an upwards low volume push up and then held high volume at the highs. That is a P-shaped profile. And typically, you don't want to be fading a P-shaped profile. That's counter trend, all right? You want to be going in line with the trend. So if the market's put in a P-shaped profile, even distribution, you want to be buying the lows of that P-shape, expecting this to continue in the direction it was going, especially with the context of this market breaking above these stacked levels, okay? And a little bit of auction market theory. If yesterday's discount was the overnight premium and we've broken above that, all right, we've held back above, the market has said, okay, actually, we're going back above premium prices for overnight and we're back into yesterday's New York value area, okay? So the market's accepted and reclaimed this sort of value area coming back above these levels. So we've got that bullish context in mind here. And when the market puts in this P-shaped profile, it's another bullish clue showing us that we want to be looking for longs, confirming the buy on the pullback to these stacked levels. So those earlier ones were good as well, right? You can get some entries in there, right? But it's going to be coming back to your entry. Then you're going to be saying, okay, am I still in the right trade? This P-shaped profile, by the time it pulls back to the third time here, still confirms that long trade. So if you're still in the trade and you see that, it's a good sign. Or if you waited till this last moment for it to pull back here, this is the perfect entry here, in my opinion. This is the A rank setup. Okay, so we've got the even distribution node, the P shape. As soon as it dips off there, dips off into that low on the previous day value area low, basically perfectly lines up. That dip in volume right there perfectly lines up with the previous day value low. I'd want to be getting long right on the edge of that D-shaped distribution. Stop loss behind the developing value low, which is also behind this smaller node here, right? You can see that kind of helped to support price underneath, and the stop loss just behind there. So 150 tick stop loss I'd be okay with. And then as terms for your take profit target, in a D-shaped profile, right, the POC is not too consequential, right? You don't need to be getting out of your trade at the point of control in a D-shape necessarily. In fact, you can target the opposite side of the range for a D-shaped profile most of the time. So you'd be targeting here, all right, for your logical exit, 289 ticks, 152 tick stop loss, okay? So pushing up to this, would have come up to the POC, small reaction back to the entry, confluence is still holding on the profile, that takes off. All right, and it does end up going all the way to the previous day point of control, okay, which again is another good C, almost B rank trade from that previous day point of control back down to the overnight value high. So there's quite a few good setups for New York today, right? Really nice to see, but this was the highlight trade for me today. Looking back at the session, right there is your highlight trade across that whole area, but more specifically using the D-shaped profile or the P-shaped profile to get that favorable entry at the lows. I hope you found that helpful, guys. I am going to be live streaming the New York session for tomorrow's session. 8:30 a.m. It's going to be happening inside the school group. So if you want to go a little bit deeper on volume profile, get all the educational additional content, the daily live streams, the weekly group coaching, and the direct feedback. Again, for only $99 a month, guys. I'm not charging you a fortune. And I'm making sure every dollar spent in here, you get at least 10 extra value back. So I'm about to go in here and answer all today's questions personally. And then, of course, in 14 hours, live stream the New York session. So I will see you either inside here, the daily Cami episode tomorrow. See you guys there.